Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Alright guys, welcome back to yet another episode of the Young Investors Podcast. Hamish, what's going on, friend?
What's going on?
How you doing?
Yeah, I'm doing well. Not too much going on. It was the Superbowl this week. Did you catch the game? Are you a Superbowl?
I did actually.
Did you actually?
It was interesting. Yeah, Emma and Emma's partner, the Broke Generation Emma, she organized a table at a sports bar.
Oh.
Yeah, we just went along and watched the game. I don't know anything about American football, but I learnt a fair bit about it. I kind of understand how the game works now, which is cool. But I definitely now understand enough to know that game was a shocker.
Oh, really? Yeah, I didn't watch any of it. I was planning on watching. I was going to watch it, and then I just kind of forgot about it. So clearly, I wasn't that interested in it.
Half time, or maybe even three quarters. I can't remember. Half time, the score was like 27-0 in favor of the Eagles.
Yeah.
So
yeah, that's a rough one.
Yeah, it was a rough one.
Yeah.
Yeah, but anyway, so you didn't watch it?
No. I thought maybe I might. I think I watched it last year, but yeah, I'm not a big NFL person, and by that I mean I don't watch any games.
I can't believe how stop-start it is.
Yeah.
There's just no free-flowing play. There's a defined 20-second play, and then everybody stops, and let's reset. Yeah, and then we do it again, and then everybody stops. And we do it again. And then everybody stops again. And we got to stop some more. And now it's a timeout or something. And we got to stop a little bit longer. And now it's quarter time. So we really have to stop.
Yeah.
There's a lot of stopping.
It's kind of a bizarre sport. I quite like watching it, even though it's stop-start. I think it's kind of interesting to watch.
Yeah.
But yeah, there's no flow to it. There's no.
Yeah.
Yeah.
But anyway, so we've got a story about you're talking through something I saw in the doc, something related to Superbowl. So
yep.
I'll be interested to see. We're talking ads, are we? Superbowl
ads.
Yeah,
the most interesting and important part of the Superbowl, which is the commercials. Yeah. So we'll talk about some of the economics behind some of the commercials that were run during the Super Bowl. You've got an inflation update for us, and we've also got some earnings that we might get to as well from a couple of different companies. We're deep in the thick of earnings season at the moment, so we're really getting everything.
Yes. Yeah, exactly right. Nope, it should be a pretty packed episode.
And with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts, so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Do you want to kick us off by taking us through this inflation update? What's going on with inflation?
Yeah.
What's the news?
Inflation is it's still there, Hamish, unfortunately.
Really?
It's still there. Yeah.
We've still got it?
Shocker, I know, with everything that's going on with Donald Trump announcing his tariffs.
He hasn't fixed it yet?
He hasn't fixed it. Surprisingly, his policy of increasing consumer prices has not decreased inflation.
Yeah. What was his thing? One of the things he said was he was going to reduce the prices of eggs or something. Wasn't there something specific? It was like eggs or something.
I don't know. That would be hilarious.
And I saw some jokes about that. Like, why are my eggs still
Yeah,
$10.
his executive orders are getting a little bit niche. Did you see the one he signed? I think it was yesterday, where he's now banning like paper straws or something.
Yeah.
We're going back to plastic.
Back to
I was
plastic.
like, oh my god.
Yeah. Straight back to plastic.
World's biggest economy. Biggest economy. And what's the president doing? He's writing laws around whether we use plastic or paper straws. Like, come on, guys.
Yeah. I still don't really understand how that works. Like how he can just write executive orders without having to go through Congress. Like normally laws are made through, both houses of Congress in the same way that here, laws pass through the House of Reps and the Senate. So, but I don't really know how these like executive orders work. Like, is there like a limit to like what he can just do?
Yeah, there is. So I think the way that executive powers work is that Congress at one point has passed laws which give the president certain powers to do certain things.
Right.
So even with tariffs, I don't think the president has full control over trade policy in that manner. They can just implement tariffs for like a few different core reasons. So like if a country begins unfair trade practices to the US, then the president has power. If there's a national emergency, then the president has power.
Of course, yeah.
And also if it's a reciprocal tariff, then the president has power. And that's why all the tariff talk we've been seeing, while it's been while we can tell it's obviously just like economic policy, it's just trade policy. He has to the White House has to frame it in a certain way. So that's why they've started this. It's a national emergency with the immigration crisis and the fentanyl.
Yeah.
And that's why they needed to do it, so that they can slap tariffs on Canada, Mexico. That was the immigration part. But obviously it's hard to argue that immigration lets you slap tariffs on China.
Yeah.
So that's when they said, China has not done well enough at stopping the precursor chemicals to fentanyl coming to the US and the cartels. So.
Yeah, I just find it funny, like, because, I mean, it makes perfect sense that you would have this kind of executive option where they can just quickly get things changed if there is a national emergency or something like that. But it seems like it's just being used as a way to like create law, by bypassing like the actual process, which is which is what is so ridiculous about writing like 1,000 executive orders on the first day.
Yeah. But it's also like a little bit of showmanship, because I think a lot of the executive orders that are written, the president doesn't actually have power to implement what he's written.
Right.
So I think what happens is he gets the cameras out and he says, we're doing this big thing and I've signed my executive order. And then what actually happens is Congress says, you can't do that. It gets, goes to a court and the court says, no, you can't do that. And then it doesn't actually happen.
Right. Okay.
But I think by the time that happens, everyone's kind of forgotten about it and it's out of the news cycle.
Yeah. They already get points
for press conference or anything. Yeah. So I think that's how it works. But anyway.
Yeah. Tell us.
So going back to inflation anyway. I was reading an article, and the article said, quote, a Federal Reserve interest rate cut won't be coming until at least September, if at all this year, following a troubling inflation report on Wednesday, according to updated market pricing, the futures market. So it seems as though, people were optimistic potentially about some rate cuts, and they have completely lost faith. And that's because the January Consumer Price Index report showed a 0.5% monthly gain to the inflation rate, pushing the annual inflation rate to 3%, a touch higher than December, and only slightly lower than the 3.1% reading in January of 2024. So I've put in the chart here, Hamish, and I think there's two kind of trends. I've got the 12-month inflation chart here, and we can see it's coming down, and then it hits a low at 2.4% in September of last year, and ever since then it's started going up again.
Yeah, it's still pretty low, obviously, but yeah, a 0.5% monthly rate is pretty significant. If you compound that over a year, it's, obviously it's more than 6% annual inflation, a little touch over 6%. And so, yeah, that's pretty it's a pretty high monthly rate. Obviously, it's only 30 days or whatever, 31 days.
Yep.
But yeah, we definitely, I mean, as we've been saying with all of this stuff, the tariff and other Trump economic policies, it'll be certainly interesting to just see. No one really knows what's going to happen, but just to watch it all play out because, the expectation, I think, is that some of these policies should be quite inflationary, but who knows?
Yeah, I mean, they should be.
They should be.
Well,
on paper,
I'll
but nothing
ever
plays out as it does economic theory just says like that it should. So we'll see.
But yeah, that's kind of more what I wanted to talk about regarding this inflation report. The actual numbers themselves are pretty boring, and it's not revolutionary or anything.
Yeah.
Like inflation's at 3%. It's just creeping up ever so slightly. It's nothing that's going to, make I'm sure news companies will try and make a big headline out of it, but there's really not anything particularly newsworthy. No. The thing I'm more interested in is the response from people that thinking about, it's like what I said as the opening sentence. People are expecting this rate cut cycle to continue, and I don't think we've kind of been in that camp because we've been listening to people like Howard Marks talk on the issue, saying that people are expecting rates to, they were at 0, then they've gone up to 5. So now people are expecting them to eventually come back down to 0. And I think it's reasonably obvious that is just not going to happen. And I chucked in the federal funds rate chart here. And we can see it's come down. There have been 3 interest rate cuts from around 5.5%, but we're kind of stagnating now at around 4.5%, and it seems like it's going to even out to be around there, which is kind of I would say maybe a moderately restrictive rate, but it's kind of like in the mid ground somewhere. It's not like super high. But it's also not super low. But I think people should get used to these kind of conditions. I don't know. What's your take?
Yeah, I mean, one way to look at it is you would generally expect the federal funds rate to be, or like let's say like a 10-year government bond rate, which might be slightly higher, to be slightly higher than what the inflation rate is. So that, when people are investing in those long-term government bonds, essentially they're making maybe a very, very modest positive return, real return, slightly above inflation.
Yeah, it's a real return.
So that's that's like a one way that a lot of economists will think about where rates generally will be. And so if you think inflation is kind of, around the 3% level, 3 to 4% rates shouldn't be surprising. And it certainly, as you said, it means that it would be, if inflation is 2-3%, going back to 0% rates or 1% rates is probably quite unlikely. Because if you have rates below inflation, then it's just such a stimulative push to stay out of bonds and be more active, spending and less saving, more spending, more investment in businesses, and all of that is very stimulative. So I think it would be surprising to see rates below inflation. But yeah, it all really depends on where inflation ends up sitting.
Yeah, I just really think people should, not expect rates to come down a whole lot. Maybe they might a little bit, but the last part we've already kind of been talking about it. The other factor in the equation is what Trump is currently doing with the tariffs on various countries, because he has made some moves that you could say are very likely to cause prices to rise. And what I mean by that is he's put, albeit these ones have been paused, a 25% tariff on Canada and Mexico, with 10% tariff on Canadian energy products. And then he's also put a 10% tariff on Chinese goods. He's now talking about reciprocal tariffs with Japan and the EU. And then he's also putting a 25% tariff on steel and aluminium coming into the United States. So when you think about it, he's put tariffs on the US's 2 closest trade partners in Canada and Mexico. Then he's also put tariffs on the biggest trading partner with the US in China, where they get a lot of their manufactured products. And he's also now taking shots at steel and aluminium, which are kind of base commodities, which then get used in lots of different manufactured products.
Yeah.
So it does remain to be seen, but I think the elements are there to show that, you know, we could probably expect inflation, because at the end of the day, these tariffs, Donald Trump is very good at trying to enforce the message that the tariffs are paid by the other countries. That's not true. That's not how it works. Tariffs are paid by the business, the importer that brings the foreign goods into America. Like a Walmart, for example, 90% of America's avocados are brought in by Mexico. So if there's a 25% tariff on Mexican goods, then Walmart effectively has to pay a 25% tax on those Mexican avocado orders to sell them in America. So
and
that's
sorry, and that's like and just to say something on the avocado thing, it's like that's the short-term effect, but specifically when it comes to things like avocados, there's no long-term positive effect anyway, because the long-term argument of like, well, then American businesses, you know, in that industry will be able to compete better and have like lower products than the international businesses. When it comes to a lot of products, like avocados, it's not like the US is just going to start growing avocados.
Exactly.
You know, there's a reason why they import avocados. And so these kind of broad tariffs, some of them are just purely inflationary. Like there's not even a long-term payoff where you could say, well, in the short term things will get more expensive, but then American businesses will be able to compete better. So, you know, long term maybe, you know, the prices will come down. But for a lot of things, there's not even that long term argument. It's like they're not going to start growing coffee beans in the US.
Exactly. Yeah. Some goods a country simply cannot make and they need to import. Exactly right. But yeah, so anyway, that's what's going on with the tariffs. I think the reality will be, because there's Trump slapping tariffs on Canada and Mexico and China and steel and aluminium. I mean, it seems like it's a hard argument to say that won't raise prices, because it's not like these businesses just take the hit. They always pass this stuff on to consumers because they don't want an additional tax to hit their profitability. So they'll pass it on. So we will see what happens. But I think there's a reasonable case for someone to expect inflation to go north as opposed to going south over the next little while. So I wouldn't be someone that's betting the house on interest rate cuts personally.
Yeah. You know, it is interesting. And I think the other thing, I agree with you, but I think just to play devil's advocate, the other kind of interesting element in all of this is this kind of AI revolution, which is a massive technological advancement that could very well reduce costs for businesses in a meaningful way. And that's kind of always like the long-term downward pressure on inflation, or it's like one downward pressure, which is technology gets better, things get cheaper. And
technology is long-term deflationary.
Exactly. So that is like the other factor that we're obviously dealing with in this whole kind of, economic boiling pot. And so, you know, how much these factors, the deflationary ones and the inflationary ones, ultimately contribute to the end number, you know, we don't know. But yeah, it's certainly going to be interesting to watch it all.
Yeah. All right, Hamish, that's what I got on inflation. We shall see what's going on. But for now, can we talk about what's going on with these Super Bowl ads? What do you got to...
Yeah, let's talk about the Super Bowl because, as we kind of said in the introduction, congratulations to the Philadelphia Eagles for beating Taylor Swift. Sorry, I mean Kansas City Chiefs. And as I said, I didn't even watch the Super Bowl, but I do care about one aspect of the NFL Super Bowl, which is the ads, the commercials.
Let's go.
Which is essentially, you know, the one time of the year where companies pay, you know, ridiculous amounts of money for a 30-second spot, which ultimately ends up driving, you know, a considerable amount of engagement outside of the Super Bowl. But I wanted to talk a little bit about the Super Bowl ads this year. So first of all, how much did companies pay for a spot this year? Companies this year had to fork out $8 million for a 30-second advertisement.
Wow.
During the Super Bowl. So $8 million is kind of
high value.
Yeah. So trying to get a return on investment from $8 million for a 30-second spot. Obviously that's quite expensive. There was quite a premium on these ads compared to, if you ran $8 million worth of ads on Instagram, you would get access to a much larger audience than just like, let's say, the television audience of the Super Bowl, which is kind of like the direct audience. But these ads don't just get viewed by people watching the Super Bowl. They're essentially an annual part of the Super Bowl experience. They receive huge engagement on social media and in traditional media. And so there is like kind of this enormous cultural kind of part of being a part of the Super Bowl ad experience. So companies are willing to pay $8 million for an ad. And so there was one type. Every year there's kind of like there's a bit of a theme usually. Usually whatever something's usually going on in the world that ends up popping up a lot in these Super Bowl commercials. Can you have a guess about what kind of ads were extremely prominent in 2025?
Oh gosh, I actually don't know. What's
okay?
what
Wait,
kind of
I'll give you.
advertise?
You know what?
It's like, isn't it like cars and movies and stuff?
It is. So obviously normally you get tons of beer ads and tons of car ads, but usually there's something kind of going on. I'll give you a hint. So back in 2022, when the crypto market is popping off, everyone's super excited. That was when we got all of those absolutely ridiculous cryptocurrency companies coming out and buying Super Bowl ads. So you had that Matt Damon crypto.com ad, which is like, be brave. And it's like, he's like wearing like an astronaut outfit or whatever. We also that year got the infamous FTX ad with Larry David, which goes down in history. David? As
that's a banger.
That is the best ad. If you haven't seen that, essentially the ad ends by some guy saying to Larry David, "FTX is a safe and easy way to get into crypto." And Larry David goes, "I don't buy it. And I'm never wrong about this stuff."
Yeah. I'm never wrong about this stuff. Never.
So perfect.
It turns out.
Yeah.
I mean, he said it sarcastically for the ad, obviously. But it is absolute cinema now in retrospect.
Cinema. And then obviously just a few months later, Sam Bankman-Fried was arrested for fraud and the company collapsed. But, So 2022, obviously, big crypto year.
It's a simulation.
Yeah, so that was a big crypto year. And so we got a lot of crypto company ads. This year, it was about...
Surely it's artificial intelligence.
Yes, it was all about artificial intelligence. So yeah, I mean, as you kind of alluded to, there's a lot of companies that just show up and run ads normally, regardless. Like you've got like a Budweiser or the, American beer ads and then car ads. But there were a lot of technology companies that were very excited to share what they're doing in regards to AI this year. That seemed to be kind of the theme of the types of companies that were willing to put $8 million down for an ad placement. So of course we got the biggest ones were an ad from OpenAI, did an ad for ChatGPT. Waffling on about how it's one of the big technological revolutions of humanity, and you also had companies like Meta who did an ad for their Ray-Ban smart glasses.
Nice.
And so AI was kind of the main thing. But interestingly, AI ads didn't really fare that well in terms of driving engagement. And so USA Today does an analysis every year of the performance of Super Bowl ads. So essentially they look at a bunch of different things such as social media engagement, the impact of ads on consumer behavior, such as like search results or search traffic for brands and website traffic. They look at the response from people on social media to build like a profile of which ads were the most were most likable, which ones received the most kind of negative backlash. So they kind of build like this list of how these ads actually performed, and according to their kind of analysis, which is obviously quite subjective, but according to their analysis, the most popular commercial was a beer commercial. Was Budweiser's beer commercial, and two of the worst performers were OpenAI's and Meta's ads on their technology products.
There you go.
And so, even though there were tons of these kind of AI related ads, people didn't really resonate with them. USA Today found that in many cases, audiences responded better to sentimentality and celebrity than the promise of technology, which I guess is not too surprising. If you could tug on the heartstrings, I guess that will do better than just an ad for some kind of technology.
Yeah, these glasses are amazing. Okay, cool.
Yeah.
I don't know. Do you feel like, side note, do you feel like these glasses are ever going to catch on?
Yeah.
These AI glasses?
Yeah. You know what? I actually think, yeah, I do. Yeah. I don't think I'm in the majority. I think most people think that it's a gimmick. I'm definitely in the minority, I think, but I think they'll be massive. I genuinely think that there will come a time where I think we'll definitely have smartphones for a very long time, but I think the number of things that you use your phone for will diminish, and I think over time.
Right.
That's what I personally think.
My take's a little bit different. I feel like they will become a niche thing. Like some people will be into them, and most people won't be. But I think they'll be really good. I think people that already wear glasses that'll be the natural evolution of glasses, like actual just glasses, or when you might, when you wear sunglasses, you might, interact with those AI features. But I just don't think most people will wear them because personally, I don't like, even when I have to wear sunglasses, I'm like, I don't really enjoy having to carry my glasses around and then I need to take them on and off and put them on my shirt and then they fall off sometimes. I'm like, oh, to me, there's just like no part of me that wants to have something sit on my face full time. And I always you see people wearing glasses all the time. They can't wait to take them off and rub their eyes or scratch their head or something. I don't know. I feel like it's a hard sell, but you never know. Maybe the technology is good enough that people just take the inconvenience.
Yeah.
I'm sure people originally said, well, I don't want this flipping brick thing sitting in my pocket all day. That's so uncomfortable.
Yeah.
So maybe I'm wrong.
I honestly, I think that kind of argument of I don't want to wear something on my face all the time. To me, it sounds eerily similar to, I'm sure, what a lot of people said about not wanting to carry, having a brick in their pocket all the time. I honestly, I wouldn't be surprised if in 30 years, maybe it's a long time, but if in 30 years, smart glasses are a massive thing, and it's just an accessory that people have. Like our generation or further back, it was you wore glasses if you needed them for something, whereas glasses are now a technology that it's everybody wears. And so I wouldn't be surprised.
I guess things like AirPods started out being oh, you're such a loser because you're wearing these wireless headphones or whatever. And having the look of the stalk coming out of your ear, people used to be like, oh, that looks terrible. Yeah. And now look at us.
Well, especially when I saw, have you seen the kind of the wrist, the kind of the wristband thing that they've made with these new smart glasses now? It's not available yet, but it's this band that essentially allows you to kind of use your fingers to control the display in the glasses. It kind of reads your electrical signals through your wrist. So you kind of have this band. This is kind of a prototype thing that they've built. But essentially allows you to kind of use pinch and small finger movements to control the display in the glasses. And when I saw that, I just thought that is so much more convenient than having to pull out a whole phone to text somebody, to just be able to have your hand at your side while you're on the train or something, and to just use minor finger movements is so much more subtle and than having to kind of pull out your entire phone. So,
yeah, true.
Yeah, I don't know. I'm a big pro glasses, smart glasses guy. I reckon they'll be massive.
But long story short, they need to improve their ads.
Yeah, but their ads suck. Yeah, exactly. Yeah, you know, it's pretty funny that the company that won, or the ad that won, in terms of likability, the most likable ad was a Pfizer ad. So
what?
So there you go. Yeah, they had some ad about. They had some kind of dramatic, emotional ad about a cancer patient. So.
Okay.
Yeah, I don't know. I just thought that was funny though. Pharmaceutical company won the likability.
That's I was going to say, what's their ad? Their entire executive team somehow dying.
Yeah, we're shutting down.
Yeah. A tribute to Luigi Mangione or whatever his name was.
Jesus. Yeah, that would do well.
Oh, dear.
And then just the last point was celebrity cameos increased this year. So 46% of ads included more than one famous face in their advertising. So
right,
yeah, there you go. That's the rundown of the Super Bowl ads this year.
Did you like the halftime show?
I didn't watch it.
I
haven't watched a single thing from the Super Bowl except for some of the ads. So
right.
yeah, I'll have to check it out.
Listen to I didn't realize some songs were by Kendrick Lamar, and I was like, oh, I know this song. But I'm sure you've been seeing the memes blow up of. I don't even really follow this beef between Kendrick Lamar and Drake, but that's taking over the internet at the moment again, isn't it?
Yeah, that was kind of
the new meme format of Kendrick Lamar walking to the side with like a big smile on his face.
Yeah, I didn't really follow that all that much, to be honest. I followed it very lightly, but yeah, I like.
Sounds like they don't like each other.
No, it seems like that might be the vibe. Yeah. Understatement of the year.
I think that's the secret, Hamish. I think we've got to secretly start a beef between us.
Yeah.
We'll talk about that later.
Yeah.
I reckon that's the way to get our next 1 million subscribers.
Yeah, we need a fallout, and then there needs to be some beef.
We'll orchestrate something.
Yeah, we'll whip something up.
yeah, we'll figure it out. All right, there you go. Super Bowl ads, hey?
Yep, there you go.
Super Bowl ads. I actually haven't even seen any of the ads. I'll have to go watch some of them. I mean, I saw a couple, but most of the ad breaks, because I was watching at a sports bar from Australia, because we had the Australian coverage, with just like cutting to different advertisers.
Makes sense.
We just got like Macca's and KFC and stuff like that. Yeah.
Boring.
Yeah, it was a bit. All right, should we do some earnings?
Yeah, take us through Tesla. Give us a Tesla update.
Yeah, this one's actually this came out a couple of weeks ago. But I normally like to cover it personally because A, I'm a shareholder, but also because B, Tesla's one of those ridiculously expensive hype stocks at the current time.
Yeah. What's it?
It's always
what's it trading at now? It must be trading at an insane PE at the moment.
165, Hamish. 165. Yeah,
that's that Trump president premium.
Yeah, the Trump effect. Yeah, mate, it's cheap. What are you talking about? It's cheap. I tell you.
160.
FSD.
Yeah.
It's going to make like $1 trillion billion, 138 trillion billion dollars per year.
Yeah.
FSD is.
The higher the PE is better, right? The higher the PE is, like the better the company, right? I think that's
exactly.
That's
Yeah. Exactly right, Hamish. You got it right. Well done. Tesla, like a lot of stocks or companies that are reporting now, is an interesting one because we are getting not only their Q4 numbers, but also their full year 2024 numbers. So I'll start quarterly, so comparing Q4 2024 to Q4 of 2023. It's a bit iffy, Hamish, if I'm honest. Revenue was only up 2% year over year, but automotive revenues were down 8%. So total revenue was $25.7 billion and auto revenue was $19.8 billion. So 77% of their revenue in the quarter was from selling cars, 12% from their energy business, Powerwall, solar, grid-scale batteries, and then 11% from services and other, which is car servicing and also supercharging and merch sales, subscriptions, that kind of stuff. And then operating expenses up 9%. Which wasn't great. So their income from operations fell 23% for Q4 year over year to 1.5 billion, and net income came in down 71% at just 2.3 billion. So of the 25.7 billion in quarterly revenue, they're keeping 2.3.
Yeah,
so
that's a car business.
And people say that it's not an auto business. Well, it certainly acts like an auto business, doesn't it?
Yeah, that is the funny thing.
At the current time.
Yeah, that is the funny thing. They've somehow managed to get kind of like a technology, air quotes, technology valuation where people are willing to pay these insane multiples because generally you have this kind of scale effect where earnings are low now, but they reach a critical mass point where earnings just kind of explode, and expenses aren't rising that fast. So a lot of these technology companies get these insane valuations, but yeah, somehow Tesla's managed to sneak in on that, even though they're an auto company that still is very low margin, and which doesn't necessarily make it a bad business, but low margin and generally quite volatile earnings, as their results can be quite influenced by the economic environment on the top line and the bottom line.
Yeah, Tesla cited the economic conditions at the current time putting pressure on their business. They also cited reduced average selling prices across its Model 3, Model Y, Model S, and Model X lines as a major reason for the decline in numbers, which you could argue is also kind of related to their broader economic conditions, the fact that they have to lower their prices just to entice people to buy in. Yep. It's not people get worried about the reduction in prices. Obviously, in a perfect world, it's not the best. It's not a really big problem for Tesla because unlike a lot of other auto companies, they do run their business profitably. So they're just shrinking their profit. Whereas, if other automakers, lower their prices, they're just making an unprofitable situation even worse, I guess. So there's one benefit there, but obviously it's still not ideal. I don't want to sugarcoat it or anything.
Yep.
So that was Q4. Then looking at 2024 versus 2023, the numbers tell a reasonably similar story. Revenue was flat. Automotive revenue was down 6%. Operating expenses up 18%. Income from their business operations down 20%, and the bottom line, net income was down 53%. So just 7.1 billion in net income for the $97.7 billion of revenue in the full year. So yeah, of the money they make, they don't keep a lot of it. Yeah. A positive sign, just very quickly, they did have record deliveries in Q4 though. They did 495,570 cars delivered. 472,000 were either Model 3 or Model Y, and then 23,600 were S, X, or Cybertrucks. Full year deliveries were 1.789 million, which was surprisingly not the 50% year over year growth rate that Elon Musk has been saying that they'll be able to keep for the foreseeable future. It was in fact down 1% year over year.
I was just about to say, I was just thinking, didn't he promise like 50% a year for like 5 years or 10 years or some insane like time frame?
Yeah.
I can't remember exactly what it was. It was for the foreseeable future. Is that what it was? It was just like indefinitely.
Oh yeah. He said, he never put a time frame on it, but he said, I think we can keep doing that for the foreseeable future.
Yeah, we're just going to compound at 50% a year for forever. Yeah.
Yeah, exactly. But no, they did not do that. Deliveries actually fell 1% year over year. However, some impressive statistics is that they started to really ramp up their battery storage deployments. 114% rise in 2024. That's a business that has started to grow. It's still very, very small. I think I said earlier it's like 11 or 12% of revenue. But that's one thing that hopefully if their automotive business is coming under pressure, they can continue to grow their energy side of their business. Operationally, they're continuing to build the new Tesla Semi factory at Gigafactory Nevada, aiming to start producing the Tesla Semi in 2026. Preparation is underway for Cybercab lines at Gigafactory Texas with volume production planned for 2026. In terms of full self-driving, in Q4, Tesla completed the development of Cortex, a 50,000 H100 training cluster at Gigafactory Texas.
Whoa.
So that's helping NVIDIA's bottom line, that's for sure. Cortex helped enable V13 of FSD supervised, and you can now start full self-driving from park, and it can perform unpark, reverse, and park capabilities. Pretty cool stat. In Q4, Tesla vehicles using autopilot technology drove 5.94 million miles between accidents, compared to the US driving average of just 700,000 miles. So that's pretty good, eh? Like,
yeah.
You make the argument that people use it more on highways where you're probably less likely to crash and blah, blah, blah. But I think that difference is significant enough that you kind of also say that Tesla Autopilot's actually getting pretty good.
Yeah.
If it's crashing once every 5.94 million miles, and then the average driver crashes once every 700,000 miles.
Yeah,
I'd probably prefer the Tesla.
Yeah, that's a fascinating stat. Yeah, you're right. It probably leans a little bit favorably towards Tesla because of when people choose to activate autopilot versus just all US, other vehicles driving. But yeah, it is. Yeah, that is an interesting kind of interesting stat. Fascinating.
I would say that it's still a big enough gap to be quite significant to still. But you're right. There's probably a little bit of a number fudging situation happening there.
Yeah.
In terms of Optimus, progress on Optimus hardware and software continued in Q4, including the latest generation hand. Apparently, it's a very advanced hand now. Don't know why they need such advanced hands, but
don't ask questions.
Robust. Don't ask questions, exactly. Robust locomotion and training on additional tasks ahead of planned pilot production in 2025, so that's creeping up. They processed their first lithium from their new refinery just 18 months after breaking ground. And in terms of 4680 battery cells, Tesla's in-house 4680 cell hit a production rate exceeding 2,500 Cybertrucks per week. So that's continuing to go. The last thing I'll add is the outlook that they put in their shareholder deck. They say, with the advancements in vehicle autonomy and the introduction of new products, we expect the vehicle business to return to growth in 2025. The rate of growth will depend on a variety of factors, including the rate of acceleration of our autonomy efforts, production ramp at our factories, and the broader macroeconomic environment. We expect energy storage deployments to grow at least 50% year over year in 2025. So that's kind of their new way of guiding, much less definitive in terms of numbers, but there you go.
There you go. All right.
And the stock didn't do much on earnings, but actually has slid a fair bit over the past month. It's now down 17% over the month.
Ooh.
Down 30% from its peak. So it is sliding, but I don't think the stock reacted very much on earnings.
Damn, I should have picked Tesla for my worst performer in the S&P this year. I think did you pick them or did you pick them for best? I can't remember.
Maybe.
You picked them for one of them.
I mean, I probably did because I'm just a genius.
I think you picked it for for worst.
Remember.
So far so
right,
good. Because I remember I picked Nvidia.
Oh, okay.
Which
we shall see.
Which I guess we'll see. Hopefully there's some terrible guidance like right at the end of the year or something. Like all the tech companies pull out. No, we're done. We've got enough H100s. Like right at the end of the year.
Yeah.
Watch the stock drop like 70%.
We're actually switching to the Chinese alternative that DeepSeek uses.
Yeah. Uh-oh.
NVIDIA has to put out a press release saying, no, that is us.
No, we did that.
Yeah. It's like that everyone starts using the Chinese alternative and NVIDIA profits double. It's like, hang on, how's that happening?
Yeah, that is a whole funny thing about whether DeepSeek actually has access to those high-end NVIDIA chips. Because I don't know if you saw, I think we spoke about this last week about how Singapore has is like now 12% of NVIDIA's data center revenue or something. It's like, so all of a sudden Singapore just needs a million H100s. Yeah, I don't know what's going on there.
There you go.
Yeah.
That's funny as.
Anyway. Let's talk.
Over to you.
Yeah,
What's going on?
Let's do Disney. Let's do Disney earnings, which I was going to do last week, but we kind of ran out of time a little bit. So I thought we'd talk about Disney this week. Disney reported their Q1 2025 results. So Disney's one of those companies living in the future, apparently.
So true.
But they reported their Q1. They want to be different. You know, they can't stick with the crowd. They're going to be a little bit different. But they reported their Q1 2025 results. Total revenue came in at $24.69 billion, which was up 5% from the $23.55 billion reported in the same quarter last year. $24.7 billion in revenue, which is broken down into three key segments for Disney now: entertainment, sports, and experiences. For their entertainment segment, they produced $10.9 billion of revenue, which was up 9% year over year. And I'll get into some of the details of that in just a second in terms of the sub-segments. Their sports segment, which is they recently kind of broke this off into its own section with all the kind of ESPN and ESPN Plus and their kind of all of those kind of sports assets. They broke them off, which I at the time when they did that, I thought for sure that they were getting ready to sell that part of their business, but they haven't yet. So it looked a little suspicious that all of a sudden they decided to put all the sports and you know, maybe they still will sell it at some point, but yeah, it certainly looked a little funny that they decided now's the time to reorganize their business.
Yeah.
But sports revenue came in at $4.9 billion, which was flat year over year, so it was about the same. And then their experiences segment, which is of course all of their parks and resorts and cruises, came in at $9.4 billion, which was up 3% year over year. So, the Disney business model has been, you know, relatively the same for a long time. I guess we've got direct to consumer in there now, but it's produce and distribute movies and then sell as much merch and related stuff.
Sell those toys.
Squeeze the IP with some experiences for kids. And it's a good business model.
Yeah, basically.
It is pretty crazy that, about half of their revenue comes from but they make about the same amount of revenue from like the movies and the advertising and that sort of thing as they do from the experiences. Like both of those are the same size. The squeezing of the IP is just as big as creating the actual entertainment. Yeah. I think that's kind of funny.
It's pretty funny. They do well. Like I think they've clearly got their formula. They found out that it works, and they've just kind of lent on that for ages.
Yeah. I say that as like when I say squeezing the IP, I think that's like a negative connotation, but like I think they do an excellent job of it. Like their parks are fantastic. I don't think it's like a bad thing. I just say it as like
I think it's both. I think it's like they do, like the parks are fantastic, but they will also charge you as much as they possibly can to enjoy their IPs.
Yeah, that is true. Yeah, that is absolutely true.
It's like one of those cases where, you know, everybody complains that going to Disneyland is extremely expensive. But at the same time, everybody still goes to Disneyland.
Yes. Yeah. You know, it'll be funny. One of the things I'm interested to watch is how Netflix does with this, because for a very long time, they didn't do any kind of really anything. Like they didn't really sell their IP. They didn't do merch or certainly they don't have theme parks. But more recently, their approach has been to set up these kind of pop-up kind of experiences. So instead of having like a theme park where it's like they've got to decide huge capex on like what rides, branding of what rides and that sort of thing, they essentially just have these like warehouse locations, smaller experience kind of locations that they can just redesign into Stranger Things, into whatever show is currently popular. Which is obviously a completely different approach. And it'll be interesting to see, you know, how they do, you know, squeezing the IP, doing that.
Well, to be honest, I think even if Disney had their time again, if say they never made Disneyland and someone had just come up with this idea now, hey guys, I've got this idea. Let's invest billions, tens of billions, maybe even $100 billion into building this insane theme park with all these rides and whatnot, and we can brand that one the Marvel Coaster or that one the Star Wars Millennium Falcon. We can build a Millennium Falcon and people come. I feel like if they put forward the plan for Disneyland today, they would not proceed with it.
Yeah.
I feel like they would say, yeah, but it's a bit expensive and we're not quite sure how consumers will react to it, so we're going to pass.
Yeah.
I feel like they'd try and like opt to maybe do a licensing approach, like Six Flags or something, and just like license some of their coasters or something.
Yeah. Yeah.
So I'm not surprised. I can't imagine that Netflix, I don't know, personally, I can't see Netflix trying to get into Disneyland kind of business,
No.
but yeah, but it's interesting to see what they will do, because Disney does make the case that having some sort of entertainment experience around your IP can be profitable and can work. But yeah, I don't know. It will be interesting, like you say, to see how they go through that strategy.
Yeah. Even just having like a physical place where people can go and buy merchandise and just interact with the brands, I think it does actually make a massive difference. But yeah, it'll be interesting to see. Anyway, even if they can pull that lever in the same way that Disney has done so well for so long. In terms of the entertainment segment, there's a couple of sub segments. Of course, the linear networks business produced $2.6 billion of revenue for the quarter, which was down 7% year over year. Although most of that decline is because they entered some kind of a joint venture with this Indian company, and so I believe I read this last week, so I can't actually remember off the top of my head, but I believe some of that revenue just moved into the direct-to-consumer segment. I think was my understanding. Okay. So even though it's -7, I think the actual result was basically it was about flat. Okay. In terms of their direct-to-consumer segment, they produced $6.1 billion of revenue, which was up 9% year over year. Disney Plus subscribers came in, the total subscribers for Disney Plus came in at 124.6 million, which was down 1 million subs quarter over quarter. So they actually lost subscribers in the last quarter, which is obviously not great. Hulu subscribers increased, and the other kind of major change to their subscribers was Hulu subscribers increased by 2 million during the quarter. So it's a reasonable increase. The reason why they didn't have a great quarter in terms of subscriber additions was because they did a pretty considerable price increase. So they raised prices between 4% and 6% quarter over quarter. And so management said that kind of stunted a little bit of their traditional subscriber additions, but ultimately resulted in more revenue for the segment. And then the last kind of sub-segment for entertainment is content sales and licensing, which was $2.2 billion, up 9% year over year. And the company, Disney, cited strong box office performance from a couple of their big productions throughout the year as the main reason for the increase. Right. And so all of that was kind of the revenue side of things. To the bottom line, that meant that earnings per share rose by 35% to $1.40 compared to $1.04 in the prior quarter. And in terms of the entire business, their operating income saw a 31% increase, reaching $5 billion, up from $3.88 billion in the previous year. Disney still a beast.
It's just Disney, isn't it?
It's just Disney.
They just kind of, you kind of know what to expect. They every now and again they'll go through a big like crisis of confidence where something's not working, and then they just kind of get back to normal and they just keep on keeping on with their revenue segments.
Yeah, they are churning out a lot of Marvel movies. I don't know if I'm just noticing it now.
Yeah, man.
But I feel like every other week there's like a new Marvel movie that I didn't even like the title is something that I've never even heard of. But I'm like, okay, I guess that's a Marvel character that they've kind of dug up from the archives.
Yep. Or it's just like different versions of the same. I remember it was like Captain America, and then like they did, okay, now we need Captain Marvel.
Yeah.
It's like, we've got Hulk, yeah, but now we need She-Hulk, and now we need a Red Hulk.
Yeah.
And it's like, now we need some other variation of Ant-Man. Yeah. We need Cockroach Man.
Yeah, exactly. Yeah, long lost brother or something.
I don't know.
Yeah.
It's just I don't know. This is the classic example of what happens when you just let business dictate art.
Yeah, it's bizarre to see.
You get formulaic crap that no one really wants.
Yeah, but I mean, I guess some of them work, but most of them, I think, recently have not been working. Like, they've been losing money. But unfortunately, some of them work.
Unfortunately,
which is why they continue to do it. But yeah, that's kind of been that's theatrical releases nowadays. It's just action movies. It's like the only kinds of movies that companies can justify, doing the big budget spending, doing the $800 million spending, $1 billion spending, is these big action movies where parents will take their kids essentially, and there's kind of an adult audience for it as well. You don't see comedies really anymore in theaters. Few and far between.
True. Yeah.
It's just the money isn't there, I guess.
Sad.
Yeah.
And on that depressing note, it's time to end. Thanks very much for tuning in as always, guys. We do appreciate the hour that you give us each and every week. Thanks, Hamish, as always, for joining me, friend.
No worries.
Good to chat, as always. And we will continue on next week. I don't know, maybe there'll be some more earnings to talk about. I guess we'll just have to wait and see.
That's it.
What Elon Musk / Donald Trump story will we have for next week? We shall see. There'll be something for sure.
Yeah.
All right, guys. Thanks very much for tuning in. We'll see you guys next week.
See you guys.
Mm-hmm.